If you live in California and you're 55 and over, or you maybe have a parent that's over 55 and over, you absolutely need to listen to this video because it's super important for exactly how you're going to strategize if you own real estate in the state of California right now. Did you know that $10 to $13 trillion worth of wealth is going to be passed to the next generation over the next 10 to 15 years in California alone? Why that's important is if you own real estate or if you have a parent that owns real estate, you kind of have to strategize exactly how to avoid paying more taxes moving forward. So there's a few things we want to touch on today. It's Prop 19 and Prop 60. In the state of California, it's super pertinent to you. And we're going to jump right into it right now.
So if you inherit a home in California, you don't automatically keep the low property taxes. To keep that benefit, you have to move in and you have to make it your primary residence as well. And it does need to be within 1 year of you inheriting the property. Otherwise, it does get reassessed at a different value. Even if you move in, the tax break only applies up to a certain limit, and anything above that can still be taxed higher. There are also very special rules that allow homeowners over 55, disabled individuals, or those affected by natural disasters to transfer their lower tax base to a new home. But these benefits mainly apply to primary residences, not rentals, and definitely not second homes. For example, if your parents bought their home years ago and their taxable value is $400,000, but today the home is worth $1.2 million, if you move in, you may still keep most of that lower tax base. But if you decide to rent it out instead, the home could be reassessed at $1.2 million, significantly increasing your property taxes. Now let's move forward into Prop 60.
Yes, here's why it's important. If you're 55 and over and you own real estate in the state of California, but you're sitting there thinking, man, I don't want to sell, I don't want to go to a single level, or I don't want to buy a bigger house, or whatever it may be, you don't want to transition because your tax basis is so good. Say for instance, you purchased your home 20 years ago for $300,000, or maybe it's $1 million in our marketplace, but the home's worth $2 million, $3.5 million, whatever it may be. Your tax basis is incredibly low, so you don't pay a lot in property taxes right now. Why would you want to get rid of that situation? But here's the thing. With Prop 60, which they've recently expanded to allow you to do it multiple times and to different counties in the state of California, what you're able to do if you're 55 and over is sell your property and take the tax basis with you to a property of equal or lesser value. You can do it with properties that are actually equal or higher value, but it substantially changes the way that they format the assessment. Here's why it's important. If you sell your property, and I'll give you a real life example. I sold a property for a gentleman that's 56 years old in Yorba Linda, California for $2.24 million. He purchased that property for $680,000 in the early 90s. So he was paying a very low tax basis, roughly $6,000 per year, around $6,000 to $7,000. But what he was able to do when he sold it for $2,240,000 was purchase a property in Dana Point, same county, Orange County, at $1,950,000, but transfer his original tax basis of roughly $750,000 over to his new property, saving him almost $7,000 a year in property taxes alone. He had no idea about this proposition, and I was able to explain it to him, send him the paperwork, fill it out, sent it to the county, and anything that he paid above and beyond what his new assessment was, he got back in a check from the county, saving him a substantial amount of money. Now, if you're on the fences and you're kind of confused as to how this works, reach out to us because we can explain it all to you. We can put you in touch with the right resources to manage this for you, but do not hesitate to sell your home because of your tax basis. And what's even more important now is people are afraid to sell their homes because of certain issues when it comes to if you have more than $500,000 of equity built up and you're trying to avoid paying substantial capital gains taxes. There's also some unique benefits that you may be able to put in place to strategize for this in order to avoid those taxes if you were to sell your home.
Okay, so walk me through this. If you bought a home for $600,000 and you're wanting to transfer the property taxes, we're going to assume like you're paying around $6,000 to $7,000. Then when you buy the home for maybe 2.2, like you're saying,
Right.
instead of paying around $22,000 in property taxes every year, you're closer to that $6,000 to $7,000.
Exactly. Yes.
Okay.
So what's nice is, just kind of for simplistic purposes, let's say you purchased the house however many years ago for $500,000. Your tax basis, roughly 1.124 on average in Orange County, let's call it, is roughly going to be, let's say, $5,500 a year, right? And if you were to sell that home today, for instance, you can sell it for, let's say, $1.5, $2 million. Let's call it $2 million for simplicity's sake. In most situations, if you were to purchase a property for $2 million, you're going to pay a tax basis of that 1% on the $2 million assessment, roughly $20,000 or more dollars every single year. What you can do now is transfer that tax basis from the $500,000 purchase price and whatever new assessments came your way with that, transfer that basis over to the new property as long as it's lesser or equal value. If it's a higher value, let's say you sold that property for $2 million and you acquire a new property and it's $3 million, you actually get to take the tax basis with you, but you just get assessed on that additional $1 million or an additional 1.124% of the million. So you're still substantially saving, just kind of have to re-strategize a little bit in regards to what additional payments you'll need to make for the additional $1 million on the acquisition. One more thing, you have to do it within 2 years of selling your property. So if you want to lease something until you find a perfect home, you have 2 years to be able to transfer that tax basis using the proposition.
So if you're 55 and older, you have any questions about this, feel free to reach out. You can find all of our information on our YouTube channels and we can help you from there.